Finovate showcases cutting-edge banking and financial technology through a global conference series featuring short-form demos and thought leadership. Now, the conversation continues on the Finovate podcast.
Hey, welcome to the Finovate podcast. We've got a fun one for you today. Joining me, we have Will Martino, co-founder and president of Kadena. Will, thank you so much for joining me today.
Thanks for having me on, Greg.
So we are going to be talking about some of the regulatory shifts that we're likely to see out of the SEC in the coming year plus. Before we get to that, I'd like for you to take just a quick moment and introduce yourself. Give us a little bit of info on your background.
Sure. So I've been in crypto for, 14, 15 years at this point. I actually got my start at the Securities and Exchange Commission. I was there helping to build a high-frequency trading analytics platform internally in the New York regional office. And they started up the crypto working group, and I raised my hand to help be the founding tech lead for it. I did that for a couple of years and then left and ended up at JP Morgan working on one of their R&D desks, which very quickly became the Blockchain Center for Excellence that my now co-founder, but at this time boss, Stuart Popejoy, and we helped to build that Blockchain Center for Excellence, built out JP Morgan Coin version 0, deployed it, got press in the Wall Street Journal for it. And after a few years of doing a lot of due diligence and research on behalf of the bank when it came to the integration of blockchain technology into financial institutions, we decided to leave and found our company, Kadena. And that was about 9 years ago, something like that.
Well, yeah, so a lot of different perspectives of the crypto space and a lot of views kind of inside and outside of the SEC. I want to start by kind of putting the situation in the U.S. in a broader context. Obviously, the different regulations across the globe, and we see a lot of this at Finovate when we see companies from different parts of the world. How would you say, historically, how does the SEC stance compare to those global regulatory entities?
So what I've found is that the U.S. stance tends to be less clear than the other regulators around the globe. MiCA in the in the EU is a good example of pretty clear regulations when it comes to cryptocurrencies. This is the regulation they put out, I think, 2 or 3 years ago, and it deals with things like stablecoins and trading platforms and a lot of other stuff in a very clear way. The SEC's approach for a long time has been less on, there's been a reluctance to actually put out regulations as innovation starts to develop. And the reason for that is a good one. And it's that it's hard as a regulator to know what the right regulation is right as something is starting to be developed to be innovated. So instead, they tend to like to use case law instead, where they go after various things that are kind of obviously not really that good. And actually go and, through that court case, establish kind of firmer boundaries around what the regulations or how people should be thinking about what the rules around new financial instruments and technologies should be. But now that the SEC has been, looking into crypto for the past decade, and with the change in the administration, I suspect that we're actually going to be getting much clearer guidance out of the U.S. regulators, and that's a really good thing because it's what we've all really been waiting for I would say the past 5 or 6 years. Is just a clear laid out. Okay, this is in bounds, this is out of bounds. Here's how we think about things. Here's how we think about proof of stake versus a proof of work cryptocurrency. Like, is a proof of stake cryptocurrency a security, for example, is a big thing. And it'd be nice to have some clear guidance of what does sufficiently decentralized mean? Do we have to worry about not being decentralized? What are these assets? That type of thing.
Yeah, I think the uncertainty, you've seen the result, it's really difficult to build on shifting sands. And so when you don't know what you can actually do, it becomes difficult to build a huge amount on it. And you see this happen where I think it's safe to say that outside the US, there are firms who are further ahead in terms of blockchain technology. I think the adoption is higher in other parts of the world as well. And so it'd be really helpful if the US could catch up here. And in order to do that, that clarity is such a crucial component. You brought up already the big shift here in the U.S. We have a new administration coming in. I think it's safe to say nobody knows exactly how things are going to play out, but there's some early indications of what's likely, what some of the priorities are likely to be. How soon do you think we'll start seeing significant changes at the SEC, and what changes are you expecting to see first?
I expect that we'll see them within the year. I mean, when President Trump took office, he launched a meme coin. So to say that the administration is going to be pro crypto is, and it's not just going to be all talk, is I think it's pretty safe to say that. What exactly the changes look like, I think it's going to be more directions from the top of, okay, it's time to actually get clear guidelines out. And also probably directions to ease up on effectively this crypto crackdown that has been going on. And just looking at the meme coin that Trump put out at the beginning, or when it was inaugurated, I believe it was launched on Uniswap, which has been having some issues with the SEC because it's an exchange, but it's an autonomous contract, but they also own the keys, so it's complicated. And I think that we're going to see a lot looser of enforcement actions and a lot more willingness to actually talk with the industry as a whole to come to some understanding of, okay, here's what the rules should be, which is going to be a great thing for the industry in general. And I think that this stance is going to last for at least 4 years.
Yeah, and I think we'll see what the actions actually take, but I think you're right. The early signs are there. It's going to be a crypto-friendly administration, and so I think the question then becomes: where does who is driving the risk discussion? Are the regulators going to be the ones who are saying, this is the risk we need to pay attention to? Will it be the traditional financial institutions, the banks, who are now looking at this and saying how much we want to get involved, or will it come down to kind of the end consumers themselves? Each individual gets to decide their own level of risk tolerance. What's your gut telling you?
I think it's going to end up being the consumers at the end of the day. I think we're going to be able to. I think we're going to see a lot more innovation, but crypto is crypto, and the industry as a whole has been educating the world that, hey, this is a volatile asset still, and it's still figuring itself out, and it's here to stay. That's, I think, the most important part. But I think it's going to be the individual consumer, and that's not a terrible thing. Right now you can go and start trading options on your various trading platforms. And those I wouldn't say are any more or less risky than crypto tends to be, especially on the edges. So it'll be a bit more heads up ball, but at the same time, I think we're going to see just integration from financial institutions in such a big way over the next 4 years that, one, it's never really going to go away. And two, I think that it's going to be used in the background, and most consumers aren't even going to know that, part of the financial infrastructure they're working with on a daily basis is actually running in the background on some sort of public blockchain.
Yeah, I think we're about to see now the real benefit of the blockchain start to come to fruition. And a lot of promises were made in the early days of the blockchain in terms of what the technology could do, the applications for it. And now I think we'll be able to start really seeing some of those applications in a way that we haven't been able to for the past, call it 10 years even. I think the first time we had a blockchain demoer on our stage was 2015. So, and at that point, it was a solution looking for a problem. It was like, hey, check out this really cool thing we could do, but nobody knew exactly where to point it. Now I think we're starting to get a good idea of where we should be pointing it. What are some of the places that you expect to see financial institutions looking and turning to the blockchain to make processes easier for themselves? They've traditionally been maybe a little scared to do because they haven't been sure enough that they could build on it.
I think the big one is going to be tokenization of funds. We're already seeing that, with BlackRock's BUIDL. We are already seeing fund tokenization just to even give some access to the trapped capital that happens to be on blockchains to more traditional funds. But that's a huge step of having large institutions, large fully regulated institutions, actually doing direct integration with the public blockchain. Because back from 2015 to even like 2021, banks were still almost exclusively looking at doing private blockchains, and this was from a risk perspective. And now, as we talk to and pitch the banks and figure out partnerships with them, we're seeing much more interest in public blockchains. They seem to have finally got it that the private blockchains are like a really good database, but a public blockchain is where the actual integration with that entire ecosystem comes from. And by directly integrating with the public chain, you can drive, well, for one, if your server goes down, the blockchain still runs, and you can just restart your server, and then it comes right back up, and it's fine. This is public infrastructure that is rock solid and is there for is there to be used. So I wouldn't be surprised if we see some more tokenization of real estate as well. That one, I think, is going to need a little bit more of a change when it comes to some of the securities regulations from the SEC, but I wouldn't be surprised if we see a loosening up of Reg CF, the crowdfunding regulation, so that we can actually have the ability to tokenize, let's say, apartment buildings, and actually and then give consumers the ability to diversify their portfolio very directly by getting small shares in buildings all over the United States. There's probably going to be a lot of other stuff, but those are the two ones that come to mind immediately.
Yeah, no, I think that makes sense, and just it seems like a natural point to or a place to point out that for the Finovate Awards this year, we do have two new categories: best cryptocurrency application for financial institutions, and also excellence in tokenization of real world assets. We're expecting to see more and more companies playing in this space, and so we wanted to make sure we're recognizing the companies who are already getting to the forefront there. Um, I want to talk about the kind of tech side of things a little bit more. What role do you see kind of technologists, innovators playing in the SEC's regulatory focus? I think in the past we've sort of seen some people have a seat at the table. Certainly not a huge amount of representation from the tech community when it comes to actually getting the ear of the SEC. Do you think that will shift over the course of the next year?
I do. I think it's going to shift in part because I think there's going to be less of a concern of the crypto crackdown continuing. So because of that, I don't think people are going to be as worried about garnering the ire of the SEC and getting too much attention by trying to go to them and talk with them. So, but also just as we've seen from the inauguration, the people who were present at the inauguration, yes, the tech leaders were out at the inauguration, but the VCs are also there, probably more behind the scenes, and I think they're the ones that are going to be pushing especially hard on clear crypto regulation and getting innovators, inside, to go in and talk with the SEC to help them and put together finally some very clear guidance on how this stuff should be regulated.
Yeah, yeah, I think again the guidance will be important, and so will having a seat at the table. So if you're an innovator in this space right now, I mean, I think the venture capitalists and people who are kind of large technologists, big tech companies, are obviously very visibly involved. If you're founding a new company, and we're seeing a ton of companies get founded over the last couple of years, if you're a founder of one of these companies, what are you looking to do right now? Are there risks that you need to be aware of? Are there opportunities that you could potentially take advantage of? What advice do you have for that group of people who might find themselves in kind of a C-level or founder level position of a fintech firm for the first time?
So I think it's a bit of a hard question, but I think generally it's when I think about it, it's about what are the things that would cause my firm to have risk. And there's really two things to just be careful of. One is if you're doing an ICO or offering your own coin, and the other one is custody. As long as you're and custody here meaning holding the private keys for the crypto. When you're doing an integration, there's probably going to be a wallet involved, so a cryptocurrency wallet. That wallet is going to have private keys. Someone's got to hold those keys. If your firm is holding those keys, you're a custodian, and that puts you. There's a whole host of risk and legal and other stuff that comes with that. Whereas if you're able to have your consumers or your clients or your customers hold the keys themselves, you don't have anywhere near as much of that risk. You're much more just building the road. You're not actually driving the car. And then when it comes to actually offering your own coin, there's huge advantages to offering your own coin. It becomes an asset that your company has that can be used for fundraising purposes. You can either be doing equity rounds or token rounds. You can be just directly on the market. There's a whole huge but there's a huge regulatory gray space around ICOs, or just coin offerings in general. And so if you're not touching either of those, then I really don't think there's too much to worry about. And when it comes to opportunities, I think that for that one, I would want to wait maybe 3 to 6 months to see exactly where the SEC is going to go, because they might end up opening up aspects of crypto that has traditionally been more offshore, especially when it comes to decentralized exchanges or just kind of direct consumer stuff in the United States. For example, my company, we're a US company. We were founded in the US. I'd actually regretted that we were founded in the US for a long period of time up until the recent change in administration. But now that it looks like it's going to be a much more crypto friendly environment, I wouldn't be surprised if there are things that have been happening more they've been happening more abroad. Like if you look to Latin America, and the integration they have with both sports, but also with betting, and for just monetary transfers, that we'll be able to see much more of you won't have to worry about actually doing those types of integrations like you would have even just 6 months ago.
Yeah, I want to come back to something that you mentioned, looking at an ICO as a means of fundraising kind of outside of the traditional venture capital space. Can you talk a little bit more about what that looks like and who, like what types of companies that might be right for?
That one, so I haven't done one of these in a long time. It's been, I think, 7 years. But we did an equity seed round for my company, and then we did three different token pre-sales. These were all fully under either Reg D or Reg S. it's through the SEC. So they were very conservatively done for, just because like I have background in the SEC and like things are much grayer. But the having a coin is nice because, I mean, having a coin is super annoying because you have a coin and it goes up and down. But having a coin is also extremely nice in that it's just an extra asset that the company has. And you can use your coin to either pay for services or to I've seen models where you're selling these coins. The coins have a value of their own, but there's also some translation to the services that your company is providing, and having the coin actually be able to pay directly for those as well. So it's more about just getting exposure to the broader market that I tend to think is the major advantage of doing a coin offering. That being said, there's a whole host of legal and regulatory requirements around it, and it's a really big gray zone. So, like, if you're doing something on a public chain that's very much base layer, then I would say you can think about doing a coin. But otherwise, I probably would try to steer away from it.
Sure. No, I think that's fair, and I think everybody can kind of make the decision. But it's safe to say, if you do want to get active in that space, you have to do quite a bit of research ahead of time. Make sure you really understand exactly what you're getting yourself into. Looks like we have time for one more question here, and I want to just end by zooming way out and looking at the long term of how the SEC functions, and what's your vision for how the SEC can evolve to support a thriving innovation ecosystem. I think it's safe to say that it hasn't been there, especially compared to some other regulatory agencies around the world. What would it take? What does that look like? And you can feel free to be as grandiose as you like here in terms of what the vision could be. We'll leave aside the question of what it actually is for the moment.
I think it's just coming out with some clear definitions for things, and also explicitly stating that, let's say they run into an area of crypto and blockchain that they aren't totally certain of how to regulate it. Of actually just to say, it's like, hey, this area for the next 2 or 3 years, there's going to be kind of a grace period while the industry figures out how this is going to work. Let's say they wanted to put some regulations around the AI's integration to blockchain technology, which I've never really found to be that sensible of an integration, but it works for this example in this conversation. AI is moving so quickly that it wouldn't be a great idea to put regulation in place around kind of that subset of the industry right now. But to be able to come out and say, okay, for this stuff, we have been learning about crypto for the past 15 years, 10 years. And we have technology leaders, founders, coming in to talk with us and help us figure out exactly what this regulation should be. But there are these certain areas where we're not really sure what to do yet. So we're just going to say, okay, in this area, we're not going to have anything explicit. And we're going to have a 2 or 3 year grace period of, we won't be going after people for doing something that we didn't tell them they couldn't do, even though just because we didn't know, no one really knew what was going on at that time. So that would actually be one of my favorite things, if there was just kind of a little regulatory kind of sandbox area for certain chunks of integrations where they aren't totally sure exactly how things should be regulated. Meme coins, for example, I don't really know how I would do the regulations around just how many meme coins and how that whole side of cryptocurrency works. Maybe they have a good idea for it, but if they don't, it'd be nice for them to say, it's look, we don't really know how we're doing this. So, if you hit these 2 or 3 major kind of intense bullet points, then you'll be good for the next couple of years while we figure out, okay, this is actually how we're going to regulate it. But I think at the end of the day, it's just clarity.
Yeah, I think that's a great vision, and I think that you're right. The clarity piece is there, even in clarity in areas that are inherently unclear. Being able to come out and say, "Hey, we know that this is going to be something we have to look at, but we're a long way from being able to put regulatory factors in place here." So I think that's a really good idea, and it's something that we've certainly tried to encourage at our shows by bringing the SEC in and letting them speak directly to innovators. I think it is, the more those kind of conversations can happen, I think the better it is for everybody in terms of getting to a more sustainable place. So, well, I want to thank you, Will, for joining me. It's been a really fascinating conversation. Obviously, a lot to keep track of over the course of the next 6 months, 12 months, and we'll have to see what shakes out. But I appreciate you spending the time and sharing your vision with us.
Yeah, thanks for having me on, Greg. It was great talking with you.
The Finovate podcast is produced by Informa Connect in association with Provoke.fm Media. Check out Finovate.com for information on Finovate's upcoming shows and to learn how you can get involved. The discount code Finovate Podcast will save you 20% on tickets to all of our events. And you can email us at info@finovate.com for information on sponsoring, speaking, or demoing. Thanks for listening.